And a 3-2, a 3-2-1.
We are back.
Yes.
Yup.
Wow, it's already 12. Darn it.
Starting a little late today. Welcome back to the Daily Traders Podcast. This is episode number 15.
Cow.
Crazy. I'm your host, Mark. This is my co-host, Jack.
Welcome.
We're back.
Yeah. And if this is your first time here, welcome.
Yeah.
Because this is going to be a...
Talk about the Daily Traders.
Yeah.
Talk about us. Who are we? What do we do?
Well, we are the largest, if not... are we the largest?
I don't know. It's kind of...
We're up there. One of the largest.
I say the largest, but we're probably not. I don't know.
Yeah.
Who knows? Who really knows?
Yeah.
However, we are one of the largest, if not maybe the largest, stock trading community out there on the internet. Millions of followers, TikTok, Instagram, now YouTube and podcasts. And it has been quite the ride. We were actually just talking about it pre-episode, kind of about what we've been up to this summer and how it's been quite the fun summer, very rewarding, but it's been a grind.
The summer's come to an end. You know, our friends have gone back to school, and you know we're in the real world. We're working, and this summer we were really busy. The summer went by really fast.
Oh my gosh, yeah, it did. Probably the fastest summer.
Oh, for sure, for me the fastest summer ever.
Yeah,
it's because we were busy. Quick disclaimer: we are not financial advisors. We cannot give financial advice. Nothing we say should be taken as financial advice. The full disclaimers is in the description below. All right, thanks. On with the episode.
I mean, it's weird to think that at the beginning of the summer, I wasn't even part of the team.
Yeah, I know.
Yeah, we were just kind of like friends, and I mean, you flew me out as one of your students, and
Went to Arizona.
yeah, we had a great time. But it all really changed in May.
Yeah.
Like I think the trajectory, the trajectory of the company, it took a big turn in May.
Yeah, I was thinking, I mean, I told you earlier this morning, I was just thinking about it yesterday, and I'm like, you just have matured so much, I think, since like Arizona.
Yeah.
You just seem older, and just, I think it's because of all of a sudden you make that switch where you're no longer, you know, living with your parents or relying on your parents. You're, you know, responsible for yourself and making money, and you have to like snap into that real world real quick, and it just makes you grow up fast.
Oh my gosh, yeah.
And so, you know, you made that switch beginning of the summer, and we started really growing as a company exponentially faster than we were with just myself. And since then we've taken on another guy, since you. And so, but this summer we got a lot done, but we had fun. Balance is important. Yeah. And so it's not like we just worked all summer. We played golf, we went out, we hung out.
Yeah. Oh my gosh.
We had a great time.
We did have a good time. Went on trips. It was, I mean, thank you. I appreciate you know, realizing that. But it's definitely, I think it's all mindset. I don't think my actual level of maturity has changed. But what I care about has kind of changed in a way. Like when I was at college, it was more about, you know, on the weekends, how was I going to have fun? Now it's on these weekends, it's okay, how am I going to, you know, get done to grow the company and work on myself as a person. So my mindset has really changed, and it's changed because of the position I put myself in. I remember we finished shooting a podcast episode, I'd imagine Tuesday, because that's when we shoot episodes. And I was at your house, and you said you should move out, like get an apartment.
Yeah.
I was like, at this point, I was still planning to go back to school.
Yeah.
And I was kind of like, dude, like that's, I mean, it all kind of just hit me. I was like, damn, like I really could drop. I mean, I was making enough money. I was doing really well. Something we'll touch on later. But you told me this, drop out. I was like, holy cow. Like, and, you know, you'll come on board with the team full time. And I'm so glad I took that opportunity. Yeah. And I got, you know, to be honest, I got a lot of lashback from my family. Like, they were uncertain. Why are you dropping out of college? I had a super big scholarship to school, a good school. And they were all very curious of why I was dropping out. And the best way I could explain it to them was missing out on this opportunity. I would never forgive myself. And I couldn't imagine, like, I would have gone to class and been like, shit, like, I wish I stayed with the company and continued investing. Or I would, 2 years, let's say, because once you like leave something, there's no real coming back. You know what I mean? Yeah. Like, this isn't like some summer job. It's like something that you're either in or you're out.
Yeah.
You're all in or you're all out, and I'm very grateful I stayed all in because what a ride it's been, and man, how much we've grown in the last couple months. It's pretty unreal.
I know. I'm glad you made that decision.
Yeah, me too.
We need to normalize dropping out as a society.
Well, no, I mean, I think it just depends who you are.
Yeah.
And like if you
Yeah.
have, I remember being in class and they would be on teaching certain subjects, and I'd be like, I already know this. This isn't helping me. I want to do this with my life. And college was just holding me back. But for some people, I mean, it's very helpful, and I'm sure it's very beneficial.
You're right.
You can be successful whether you stay in college, whether you drop out. It's just what your individual path is as a person, I believe.
It's also a great way to make connections at the end of the
Yeah.
day, but it's still a very high cost to do so. You know, a lot of people go to film school just to make connections, or maybe they just suck and then they want to get better. You know,
Yeah.
it's the same sort of thing there. So I get it in a lot of ways, but I think for very motivated people, say traders, like you could be successful trading in college, but it would be very, very difficult, especially in social scenarios.
Yeah, true.
I think it depends on what you want to do. I think the problem is a lot of, kids going through high school don't know what they want to do. Most people don't know what they want to do. So there's the people that do well in following the system, and they're like, great, I can do this. I can, follow the rules and get good grades and go through the system and, go to college because that's what I'm supposed to do. And I'll, figure out what I want to do in college. And,
Yeah.
and that, unfortunately, for a lot of people, they either don't really know what they want to do or can't figure it out in college, end up with all this debt, end up with a useless degree and aren't able to get a job, or have to go back to college because their degree isn't, getting them a job, getting them where they want to be, or they change what they want to do. So it was interesting. I was talking with someone the other day, and she was saying how like homeschooling kids, by doing so, you're able to focus on, teaching your kids or really helping them figure out what they enjoy, what they like, and focusing on that, and still, learning the things you need to learn.
Yeah.
But not just being put in the system and following the rules and, taking all the classes that you have to take because you have to take them. Being able to have a curriculum that's based off of your passions or things you're really interested in, which is ultimately going to result in success.
Yeah. It's so true. And it really depends who you are. Like I said, it depends who you are as a person. And do you believe at the end of the day it comes down to money? Like, this is one of the biggest moral, ethical debates is like, does money bring happiness? And I feel like people go, you go to college to get a degree so you have financial stability. But if you can achieve that years earlier, like the other day I looked up, I was like, I'm just curious. I wonder, because my goal in college was to get my MBA. So I looked up, what does the average MBA student make salary per year? I was like, holy shit, I'm already making a good amount more than that.
Yeah.
I was like, why? And that would have been 5 years of my life.
Yeah, exactly.
Just to get to where I am now.
I don't think money buys happiness. It can, get you things that'll make you happy for a bit, but it's not going to bring true happiness.
Yeah, but it brings like secure. You know what I mean? Like if you have money, it's like you have more free. You know what I mean? Like if you are limited in how much money you have, you can't go out I probably shouldn't go out to lunch right now. I got to save that money. I shouldn't. I don't want to do a weekend trip. I need to save my money.
Yeah, it's definitely, the more money you have, the less stress you have, and less stress definitely will make your mood happier. You'll be happier.
I guess it's about life though. Like if you. Trading stocks is one of the most stressful jobs there is.
Yeah.
There's nothing like waking up and seeing a position move way against you and then saying, oh, shoot, should I cut losses? Do I go against my plan? Like, it's a very stressful job. So I guess it's not that it brings down stress, but it brings you security in kind of like your personal life. Like, you're able to.
Yeah. Yeah, I remember like the first incremental steps of like making money, and I remember, where it was like not a struggle, but when I was just working and not making much, and lunch would be like, all right, I'm gonna buy lunch $30, that like I gotta think about that. Do I really want to do that? Or spending money on gas? We're buying gas. It was like, oh, like shit, okay,
Yeah,
like, that's a lot of money.
I know, right? You would work all week just so you could pay for your gas and maybe go out to lunch with your friends and buy a t-shirt at the I don't know, mall or
Yeah,
something.
literally. And that's like, I mean, I remember when I got to the point where I just stopped thinking about that stuff. And I didn't realize it until I thought about it. And then I'm like, oh, I no longer think about like paying for gas. And I don't know what threshold that was, how much I was making. But I'd say it was probably when I was making like $500 a day. And then you just really just stop thinking about small stuff like that. And I think the biggest leap for me when I realized that, you know, I could really just have a nice lifestyle was when I started making $10,000 a month.
Yeah.
As, you know, like a high schooler, and I'm, you know, it's like, you know, your expenses aren't much.
Yeah, right. You're just saving all that money.
You're saving that money, or you're spending it on stuff you enjoy. You're traveling. $10,000 a month. To the difference between $10,000 and $50,000 a month, as far as your lifestyle, isn't much different. It's really not.
Yeah, it's interesting.
That's what I've realized.
Yeah, one thing that I actually talked to you about this today because I was blown away at how much money I could save is I was going out to like lunch, dinner, breakfast every meal of the day down here. And I talked to my dad. I was like, yeah, I don't know. This food's so expensive here. It's like $20, $30 every time I go out. He's like, dude, just buy groceries. I'm like, what? Like, I could buy groceries.
That's fair.
So I went to groceries and I went to groceries. I went to Whole Foods or something and I got groceries. I was like, oh my gosh, I just spent like 2 meals out for my whole week. That's insane.
Yeah, you spend like $50.
Like, do you
get like 3 days worth of food.
Oh my gosh, I was like, this is awesome. But like, it still feels good to like, do you believe in saving money? Because I remember Graham Stephanie's very, obviously very successful, and he still refuses to buy coffee because of the margins. So like, obviously that might be a little extreme, but do you believe in like consciously saving money?
I respect that. Like, some people have plenty of money and they like saving and they like penny pinching or whatever.
Yeah.
If I always tell myself, if I had to worry about saving money, if I had to budget, I was fucking doing the wrong thing. Like, I wasn't where I wanted to be in life. I f***ed up in some way. Yeah. And I never want to have to worry about budgeting or saving money, because I just want to have enough money where it's never a concern, where I never think about it.
Yeah.
There's no stress. Like, just, it's not a concern of mine. And it's like, that's what I was saying. If I don't have a jet in 5 years, like, I f***ed up, I did something wrong.
Yeah, right.
But that's how, I mean, that's just kind of like my mindset when, you know, I started making money, and, or I just, before I want to make money, like, I always knew what I wanted to do. And, not that what I wanted to do, but I always knew I wanted to be rich. Mm-hmm. And I wanted that as fast as possible.
When did you know that?
When did I know that?
Like, when
realistically,
because I have the same like feeling, like I need to be rich, I want to be rich, I know I'm going to be rich, but that hasn't kind of kicked in my life until I'd say I started trading stocks when I was not even when I started, but like when I started actually making money.
Me,
say like 17.
Okay, well, I was probably
like 16, 17.
I don't know. I was probably okay. It was probably just as I was toward the end of middle school.
Wow,
which was like, what's middle school? Seventh and eighth grade? Yeah, so I was like halfway through 8th grade.
All right, so you were like 14, 13, 14.
I don't remember.
Yeah. No, I remember having like a really like distinct feeling when I was 16, but I feel like when it comes down to it, that's all you really need. Like, if you have that drive and motivation and passion to make money, be successful in some way, like, that's what you need to get you there in the first place. If you don't have that, how are you going to put in that work?
Yeah. Yeah, I guess it
all starts with a feeling or a thought.
Yeah, and it wasn't that I knew I was going to be quote unquote rich. I guess, what do you describe as, what do you think rich actually is?
Well,
like,
let me
how
help.
Much money is rich?
Well, let me help you out here. I know what you're trying to say with how you knew that you were going to be rich, because you had that confidence. You had that like drive. Like, from the first day I met you at school, we went to high school together for some lore. I just knew that like you were going to be successful. Like, I don't know what I told this to somebody. Like, I had a class yesterday. I told the professor this. I was like, yeah, like my best friend who I work with, like, we bounce things off each other so well, because like he was better at storytelling, and like way better at me than at storytelling, and I was better at like making hype edits. And So like it just worked, and then we like excelled off off each other's energy.
Yeah.
But then you took that same energy into trading and into like whatever else you did. And when everybody doubted you, you proved them wrong in every step of the way. Like it's insane. I remember when everybody was on you for, doing crypto and then trying to learn how to trade. I remember when you were learning how to trade. It's like crazy.
Yeah.
Yeah. It's really, really wild. So I think that's a good indicator of somebody's success is how driven and how much they don't give a
Yeah. Yeah. Thank you.
right?
Appreciate
So
it.
I think this has been great, but I think we should get into some market stuff because it's been a wild ride this week so far.
Yeah,
the
let's do
market
it.
today is.
Let's kick right off. I'm sure the center camera can see the /MES, which is the micro contract for the ES contracts, which are S&P futures. It's kind of a mouthful, but it dumped pre-market, and then it's continually dumping into market hours. We're down
Across the board.
Yeah.
Explain to me, is that just like a straight up and down candle that I see
pretty
on that
much.
screen?
Yeah.
For audio listeners.
Yeah, I mean, it's
Yeah.
a pretty violent drop. And there's a reason for this, and it is because of the CPI reports that came out 8:30, I believe.
What is the CPI
Yeah,
reports?
I woke up.
Yeah.
It was like 6 o'clock, and I looked, and the market is like green, like a little bit. It's like
Yeah.
up 0.5% across the board. SPY, IWM,
Yeah.
and I went to the gym, worked out, got back, and then I looked, and all of a sudden everything was down like 2% plus.
Yeah, so pretty
across
much
the
what
board.
happens is the CPI is the consumer price index. And what it does, it calculates pretty much the weighted average of all household goods, right? And so what it means when that inflation is going up, it's kind of reflecting the cost for middle class living, right? And what we talked about in the Fed meeting that took place in Jackson Hole a couple weeks ago, which also caused a huge drop in the market, another 100-point drop. It was pretty much what the Fed was going to speak on, what the whole central bank is planning on in terms of their goals with the economy. And I have a couple notes written down here, and it pretty much talks about how the central bank they're pretty much putting price before interest rates and saying that the economy needs to lower price. And it's true. And what we've actually seen lower prices. I mean, gas has been cheaper. We've seen food drop a little bit. So there has been, what happened was they were expecting less inflation with this report. So when it came out, and I believe the report was 8.1, was that what it? Yeah, 8.1. And I mean, it just undershot expectations, and it dropped because, as we know, the central bank's main goal right now is to lower inflation. And they do that essentially by raising interest rates, which are bad for big business, small business, medium business, and shares reflect that.
Yeah. Luckily, I mean, well, you don't have any positions open.
Yeah, so I sold 10 MES contracts on the open, and a lot of people might wonder why I trade the MES just opposed to the ES, and which is the futures for the SPY, like we touched on. It's because I'm able to scale in and out of contracts. So for an MES contract, for every one tick, it is $5. So for every 1 point, it's $5. However, for a full future contract for the SPY, it is 1 point is $50.
Okay.
Yeah, so if you were trading
Wow.
10 contracts, $500 for every point, it dropped like 100 points. I mean, that's a
Jeez.
yeah. So I trade the smaller contracts. That way, I'm able
Okay.
to scale in and out easier. Yeah, so, if I might want to take some profits here, let it run a little bit more. You can't really do that with when you're trading one contract. So having the MES opposed to ES, which is definitely a good avenue for beginner traders to get into trading.
Futures?
Yeah, futures. I believe the MES, because you don't need a huge account. I believe you only need $2,200 dollars of buying power in order to trade a contract. So
I've never traded futures.
Yeah, how come?
I just, once you find something that works, it's like you don't really deter from that. You kind of stick with what works. I just haven't had the need to. Maybe
Yeah.
if my strategy system stopped working, but
Yeah. What happened to me
I just
was
try to stick to my
I
thing.
was day trading options, right? And I would normally find either good like zones I was trading, and I would trade out of supply and demand zones, along with using moving averages and price action. And I found that I was kind of getting slammed on the premium, and especially when you're trading contracts that expire that day or the week, you're kind of getting slammed on theta too.
Sure.
And with futures, you're not getting. There's none of that. Kind of like all the delta and the theta, they're very linear in how they're priced, right?
Okay.
So for every point, it goes up $5, $50, right?
Okay.
So you're able. It's more consistent in how. For someone who's day trading, the SPY or other commodities futures, I would recommend trying out futures or at least looking into them, because you don't really get slammed on that premium like you do with options.
Huh.
Especially
Okay.
when entering
Neat.
exiting positions.
I just had a good trade. I just closed this morning. I entered a trade yesterday inside the mentorship group. And if
Yeah.
you don't know, I just post all my personal trades. I just say like when I'm buying and selling a stock. So I bought some contracts and sold those this morning on open, or it was like 2 minutes into open. I locked in like 37% profit.
Nice. There
What
you
was
go.
the ticker? It was KB something.
Yeah, we can put up a chart on the screen.
Yeah, so that was good to see. This year I'm up like 280% in gains called out inside the mentorship group. Yeah, it was 36 point something percent.
Do you want to touch on why you took that trade? And
Yeah,
what
it's,
you saw?
well, I'll try to briefly explain. It's hard without people being able to see a chart. But yeah, ticker symbol KBH.
We can put it up on the screen.
I bought some contracts that expired, about a month out. And I'll put it on the screen for anyone who's watching. So I trade based off, so I am a trend/pattern trader. I saw a comment on another TikTok video, and it was someone who was like, he said he doesn't believe in candlestick patterns, but he trades based off of patterns. And there's a difference between like preconceived candlestick patterns,
Yep.
like the flying bull horse flag or something like that,
Yeah, hangman candle, engulfing candle,
versus
head and shoulders.
like an actual pattern on the chart, which is history repeating itself, which is a clear visual representation of something that's happened multiple times. It's a pattern, right? So what I look at is I look at a trend, and within the trend, there are patterns you can spot in the trend. And then I use a series of moving averages to trade certain setups. So with KBH, the trend was bearish. So it was a bearish chart, and the pattern was a clear pattern of lower highs being formed on the 4-hour time frame. We saw clear rejections at the 180-day SMA, this moving average. Okay, and I'll pull up a little, let's see. I'll read kind of what I said briefly. So I'm looking at the trend, right? Identifying a pattern, looking at a couple moving averages, and I have different setups that I trade. I know the expectancies for those. I know which ones have, which ones I've seen better returns. So when it comes to sizing for that position, I'll account for that. I look at support and resistance levels to figure out how I'm going to manage that trade, right? Mm-hmm. So essentially, it was a 1 to 2. I was risking $1,000 to make $2,000. That's probably the easiest way to explain like risk to reward.
Yeah.
And I sized in 5% on this position. Okay, the margin for profit was roughly 7 to 8% on the chart. And then the resistance sat like 3 to 4% overhead. So I bought some puts. I was shorting, right? And obviously the market was down today, which definitely helped. Mm-hmm. And overall, though, I was just trying to play that move back down to a support level. And we locked in profit. I do like to say that it's important to stick to your trading plan. I had a trading plan that I formed before I entered. You do always have to, kind of change your trading plan, because risk to reward is ever evolving. Risk to reward isn't stagnant. Once you enter a trade, the risk to reward is constantly changing. So you have to adjust your plan according to that. But I followed my plan and I locked in profit. So it was a good trade. And I think I also wanted to touch on something which is important. we were having some fun this morning in the office because everyone made some money. Yeah. And but it's important not to get emotional when it comes to trading. And you have a great day, you have a green day. Obviously, you're going to be happy, but you don't want to celebrate that too much. Because what happens is then the inverse response to that is when you have a red day, what are you going to do? Like get depressed, you know? And it's like I've lost $56,000, you know, over a couple of days, and because of the way I've gone about trading over the last couple of years and not rewarding myself on green days, not getting depressed on red days, I didn't let it affect my emotion. Obviously, it sucks.
Yeah.
But I didn't let it get me down. I didn't get depressed over it. It's like, oh, there goes a very nice car, you know?
Right. No, so I mean, we probably broke our own rules a little bit. Because I mean, the whole office was up tens of thousands of dollars. So we were kind of, you know, just in that like couple hours, and so we were definitely excited, playing some music. Everyone was laughing.
It's fun.
I mean, we've been clapping all week at market open. Can we talk about this?
Yeah, here we'll talk about that. I'm gonna.
It just increases morale. I think it's great.
Yeah, so the bell opens. If you've seen like on the New York Stock Exchange on the floor, the trading floor, the bell goes off, everyone claps and celebrates. It's kind of fun. It's a good way to like start the day and get hype, I guess.
Definitely gets us all hype.
Definitely, right?
I'm sure all the other offices on this floor hear just a bunch of clapping.
So yeah, I wanted
9:30.
I wanted to play this video. I'm screen recording it. Ready?
Excellent.
It's so this is at market close on the New York Stock Exchange.
They do it for market close and
I just had a funny point to make that I wanted to bring up. So this is I'm screen recording. So they're all like clapping for the, and then I'm sure like one of the guys are gonna hit the bell with the hammer, but
end of the day.
Imagine if you had like a really bad day trading, and everyone's like, "Woo! Like, let's go! Up top, Mark! Like, let's go!"
I can't.
Yeah, I know. I went for it. I was like, "Oh, I can't like move forward."
Don't move. I don't want to reset your focus.
That's actually really funny. I never thought about that. Yeah, they all celebrate when the market closes, and someone's over there in the corner like, "Oh, I just lost $100,000."
So funny. Okay, this is funny. When trading the pit, it's all like a big like free for all. You know what I mean?
Yeah.
And
Jesus.
Wow.
Semi truck going by.
Yeah,
That was
loud.
loud.
Loud truck. Still going by. Okay, now it's gone.
Can't do anything about it.
But yeah, it's like a 1v1. It's like a free for all, right? It's like I don't know, like like Fortnite. You know what I mean? But like you're you are trying to take money from the guy who's next to you, the guy who's in front of you, the guys behind you.
Yeah.
So it's like imagine, and they're buying like when for every buyer there's a seller, for every seller there's a buyer, right? So let's say
they're trading with huge lots.
Yeah, and they're trading 10 lots, right? If it goes one tick against them, it's going $500. So it's going thousands of dollars against them. So, seeing, oh my gosh, I'm giving Jeffrey $1,000 for every tick it goes against. It's crazy. I couldn't imagine the like war zone mentality you have in that.
It pit. Is like a war zone in the pit.
It must be so intense down there. And now hey, media, you want to look up how much a seat for the pit goes now?
Yes.
All right, we'll get back to that.
It used to be like $4,000 a month. It's gotta be way more now.
Yeah, they like can buy and sell them now.
That was a long time ago.
Yeah, now like certain funds will have guys in the pit giving them like real time, like what's going on.
Wow.
I'm curious, like if you have a seat in the pit, like how easy is it to read like what's going on? You know what I mean? Because the guys in the pit,
I don't even know if you can buy seats now. It's probably like I can't imagine you can just buy a seat.
Those are the guys who are controlling what's happening on the screen. You know what I mean? And we're just trying to like follow along with what they're doing. But
yeah, seriously.
So, well, this is interesting. The first thing from Investopedia says in 1942, shortly after the end of the Great Depression, a seat cost a mere $17,000 in 1942. So that's probably God knows how much now.
17,000.
Yeah.
However, I was definitely thinking of the wrong.
However, you were thinking quite low. What's the highest price paid for a seat on the New York Stock Exchange? Recent prices include the highest price ever paid for a seat, $2 million in March 1998.
How long do you get
1998?
that seat though?
It sounds like for life. I mean,
No way.
You
It's gonna
buy
be
it,
like a
like-
year.
I'm at $2 million for a year. Jeez,
Just depends. Like
that's crazy.
if you're using it as like you said, like a hedge fund has a trader in there
Yeah,
just
they-
to gauge the room.
Yeah, they have guys in the pit.
Yeah, this one says, this is from 2017 on Career Trend. The price of a seat on New York Stock Exchange can be as little as 4K and as much as 4 million. The price of
As
seats,
little as 4K, yeah.
yeah, the price.
I
of
knew a guy who
seat-
got one for 4K.
Yes, the price of seats is set by supply and demand, and the price tends to fluctuate with the state of the economy. So
That makes sense.
Yeah, it all makes sense. But at the end of the
Let's
day,
get a seat.
well, at the end of the day,
Imagine.
this says, to own a seat meant you could trade on the floor of the stock market either as an agent for someone else, a floor broker, or for one's own personal account. So you got to take that into it.
Imagine having
Yeah, so
like
you could just buy a seat and trade your own account.
that's interesting.
Yeah. That's the guy. I knew this guy who did that.
Yeah.
He'd literally he'd pay $4,000 for a seat. He'd go in once a month and trade one report, and he'd make like a couple $100,000.
What?
Yeah.
Oh, was that? Would you hear that on a podcast? Mm-hmm. He would trade one report.
Yeah, it was like one monthly report. He
And
knew
you
it like the back of his hand, and he'd make a couple $100,000 off
See,
the report.
unique trading strategies.
Yeah. You
That
don't
is,
need to trade. You can literally trade 3 times a month.
Yeah, you could. I've heard stories of guys who traded the first hour of market open and they left.
Yeah.
They I don't know how they did it, and they just traded an hour and then they left. And then
They make their money and then they're done.
yeah, I was watching the seminar and there's this guy who he would trade, he was this crazy trader doing hundreds of thousands of dollars a day. And his issue was he'd make all this money, he's trading hundreds of lots. He'd make all this money and then he'd blow up like half of it or sometimes even go into the red at the end of the day. So what he got at this trading coach and what he did was he just stopped trading after like 2 or noon. So he would go home. He would just, maybe
Yeah.
not. And then but it's like knowing because he kept doing it over and over again. He was like, what is wrong with me? Like I make all this money and then I just can't anymore.
Just give it away.
Yeah. And this coach was like, dude, just leave.
Leave it too.
Yeah. Just leave it too. Like,
I went
don't-
through a period of that day trading where I was doing well. I'd do well, whether it was a morning or I'd be up, and then I couldn't stop. And then you slowly chip away your gains. It's hard to keep. That's why like with swing trading, I enter a position, say I entered that position yesterday, and then market opens, I follow my plan, close the trade, and then I'm done. It's not like, oh, let's go day trade, let's go find another trade.
Yeah.
And then you start giving back your gains.
Yeah, it's all like never like unless when you see it, this is how you know when to enter a trade. When you look at a trade and you get, okay, I want to put my money into this. You shouldn't be looking at a trade and say, oh, how can I justify this? You know what I mean?
Yeah.
You should be looking at a chart. And if you see your setup and you're eager to invest or like put money into it, that should be your sign. That
If it's a setup you want to trade.
exactly that should be your greatest indicator, like how you feel about this trade. Because if you see a trade like, I don't really know, but it does kind of have this setup, and
I see what
if
you
I
mean.
look between all these time frames, it makes sense on like this time frame. Okay,
Yeah.
so I'm gonna do it. You know what I mean?
Yeah.
Because you just want to put on a trade, and then you're hopeful it makes money.
Yeah.
Like you should, if you ever catch yourself saying, "Oh, I really hope it goes towards this level or
Yeah.
it breaks here or whatever," it's not. It's like stop doing that because
Yeah.
that's not helping you. That's not how you should be trading. Hopeful trading it should be completely logical and technical.
Yeah. And also just be like happy with the money that you've made once you've made it.
Yeah. Don't see, it hit my target. I'm up $2,000, but
let
I
it
can
run a
but
little bit more.
Yeah, let it run. Maybe I can make $4,000. It's
That's why I always say like once I enter, have my plan, close my screen, walk away. When I exit, okay, I turn off, like I close my screen or whatever. Don't look at the chart. Like I don't go back. I don't look at the chart again. Like I don't obsess over a trade that some people will like exit a trade and then keep looking at the chart like, oh, I could have stayed in more, could have made more. It's like the worst thing you can do because then you're just in the back of your mind, you're telling yourself like, oh, I did the wrong thing, when in reality you followed your plan, you did the right thing. And then next time you're thinking, oh, well last time, if I had held a little longer, I could have made more money.
Yeah, I mean, in my journals, because I record every one of my trades, and I say, oh, I could have. If I follow my plan, it's a good trade. I'll say at the beginning, good trade. I follow my plan.
Even if you lose
I've
money.
lost money, whatever. But I follow my plan. I got out here. This happened, and
It's your tilt.
yeah.
You can keep track of your tilt.
And do you want to explain tilt?
I don't know the actual definition for tilt, but you can like when I use this program, I won't say what it is unless they sponsor us, but you can, it keeps track of your tilt. So yeah, like you said, if you followed your plan and you got out for a loss, you react with like the green, like, yes, I followed my plan. It's positive tilt.
Yeah.
And then there's like, okay, your entry comment, your exit comment, your trade management comment, and you log them all and it calculates your tilt. So like if my tilt goes red on the week, I know I'm trading based off emotion. I'm not following my plan. That's just basics. If it's green, then I know even if my tilt's green, but I'm still in the red, then I know that I'm like, I guess the best way is to describe it as emotionally in the right place to trade.
Yeah. So what do you do if your tilt's red? Do you just not trade?
It's not like depends how red, but that it was not an indicator. What do you call it? The tilt.
The tilt? I mean, that's not. It's more about yourself. Right?
Yeah, but I'm saying like I used it a lot in the past, and I don't use it as much anymore. Mm-hmm. But if I did see that, I was just constantly not following my plan, I was exiting too early, or I was, taking profit too early, and I'd notice that, and then I'd take a step back and be like, all right, why am I doing this?
Yeah. All right. Here's
It's
the
just
thing.
like a self-reflection tool. It tells you, it shows you. It's like you're not in the right mindset to be doing what you're doing.
Yeah, okay. Well, here's the thing about trading that most people don't understand. If they don't understand, they should figure it out. Because if you're trading without a plan, you are randomly trading. If some positions you exit early, some you exit late, some you take off, and some you take all the profits once it's a stop. Or if you are doing that, you are trading randomly and there's no edge in your ability. And without an edge, you are going to lose money. I mean, everyone is out there trying to take your money. So if you don't have an edge or a leg up on them, your money's going to go straight out of your account right into their pockets.
Yeah.
So it's like if you are struggling as a trader right now, you got to write down a plan. Write down what setups you look for, what your favorite setups are.
Yeah.
What like percentage size of your account you put into every trade, and if you scale in or out, and then where you're going to take profits and where you're going to take a stop, and are there any discretionary parts of your plan where, okay, if this happens, I can take profits early. So it's all about having an edge. If you don't have an edge, you're not going to win.
Yeah.
That's it. Simple.
I like it.
Yeah. Hey, do we want to take a break?
Yeah, let's go to a little break and we'll be back. There we go. And we're back.
That we are.
There's a tool I use. It's called the Ticks. It's ticker symbol TICK. Now, I don't use so I said we were just talking about this, and I'm like, I don't use indicators. But this is not an indicator. It's a tool. I'd say it's a tool.
Fair enough, yeah.
So it's not something you put like on your chart to trade with, but it's a tool you use to see the overall market. So I use it to be aware of the overall market. It's like the overall market's fuel tank. I made a YouTube video about this. It's called like my favorite trading indicator. I'm pretty sure it's called indicator in the video. Yep. But it's a good tool to use so you can see where the market's at generally using certain levels, okay, that you'll see in the video if you want to check it out. But we were looking at it this morning when the market pulled back, and this was how did we end up wording it?
Yeah, it was confusing. It was the third lowest ever in the history.
The third lowest the ticks have dipped in the history, and this is according to Thinkorswim.
Yeah, I can actually
we're able to only go back to 2009 on Thinkorswim, and this is the third lowest the ticks had dipped. So that means the selling pressure was the third. So that when the ticks dip into the negative, it's sellers stepping in, and when the ticks are in the positive, it's buyers.
And the low was
So it was like
1,837.
Yeah,
That's
so
low.
1,800 negative on the ticks. And
Yeah.
normally it's trading somewhere in between positive 600 and negative 600. And then it may dip down to negative 1,000, okay, if
Yeah.
market's selling off, or positive 1,000. And that was crazy to see. And that's a little alarming, a little scary.
Yeah, right.
What do you take away from that other than?
Well,
the fact
I haven't done too much historical kind of backlogging on the ticks. However, like I said, I went short 10 contracts of the MES futures. So, I mean, yeah, it kind of just goes along with my trade plan in that it's bearish. And that goes along with my sentiment. Obviously, I'm more based on price. That's how I trade. I trade on levels. It just kind of it's not something I think you use it. It's not something that I use as a kind of yes or no. My trading, it's just kind of something that I look at to consider. Wow, if I want to enter a trade, it helps me kind of get a broad overview of the market.
Yeah, it's like at a quick glance,
That's
you
how I
can
use
get
it.
an overview of the entire market without going looking at SPY, QQQ, IWM, or individual stocks.
Yeah.
Just like generally, it's like the market's fuel tank.
Right. Hey, I wanted to react to a video. It was a TED Talks. We got to give credit to them. And it's very interesting. It talks about how the stock market was created. Now it's 5 minutes.
Okay.
It talks about where the market originated from, and it kind of gives you a perspective of why people buy shares and how it's transformed into what it is today. So
You're screen recording, right?
yeah, I can screen record it.
Excellent.
All right, we pulled up the video and we're about to watch it. It's interesting. It pretty much goes over.
I'm gonna be.
Oh, we already
blinded.
talked
I'm
about
gonna
that,
be
so
blinded
I'm
the
just
whole
gonna let
time.
it roll.
Here, let me turn this off.
Yeah,
There's just
we have
lights. Oh.
we have a bunch of like show
Jeez.
lights in there, blinding to look at them. Let's get this rolling.
Is that better?
All right,
Yeah,
TED
way
Talk.
be- way
All
better.
right.
Run it.
Here,
Investing.
Pause it.
Investing. I want to read the quote.
Yeah,
Someone back it up.
let's read the
Oh
quote.
my god.
Back it up.
There you go.
You read it, or do you want me to read it?
All right. Investing should be more like watching paint dry or watching grass grow. If you want excitement, take $800 and go to Las Vegas.
Paul Samuelson, whatever. I don't know who that is. I'm sure he's an accredited investor as they're quoting him. But what do you think of that quote?
I mean, it's investing. That's true. It's
Yeah, sure. I think that more pertains to long-term investing because let me
course,
tell you,
of course.
trading option contracts is pretty darn exciting.
you can compare that with going to Las Vegas.
You totally could. I think it's more the trade and the skill of becoming good at investing takes a long time. And if you're looking for a get-rich-quick, then go to Vegas.
Oh, okay. Yeah.
And maybe Vegas can be used interchangeably with risky investments like options.
Yep.
Are we gonna watch
Yeah.
this video?
No, let's
or-
Yeah,
watch it.
let's let it roll.
All right.
Just kinda
We had to
cut
pick
that.
apart the quote.
In the 1600s, the Dutch East India Company employed hundreds of ships to trade gold,
So this is before
porcelain,
stocks
spices,
existed.
and silks around the globe. But running this massive operation wasn't cheap.
Pause
In
it.
order to fund their
I feel like I'm back in colonialism in fucking high school. I just had a flashback.
Yeah.
Oh my god.
That was a great class.
Jeez.
Are you okay? You look.
I don't know.
You look a little red.
He's definitely suffering.
I just got. Okay, I'm good. Don't worry.
Okay, resume.
All right.
I'm good.
expensive voyages, the company turned to private citizens, individuals who could invest money to support the trip in exchange for a share of the ship's profits. This practice allowed the company to afford even grander voyages, increasing profits for both themselves and their savvy investors. Selling these shares in coffee houses and shipping ports across the continent, the Dutch East India Company unknowingly invented the world's first stock market.
All right, pause it.
Since then,
Neat.
So yeah, that's how the stock market was essentially created, way back in the 1600s, and you think they had out of the money call options that expired that day back then?
Definitely not.
I bet they definitely had some rug pulls though. Like some dudes were just like, "Oh yeah, we're gonna go here and do this," and then they
Do you
just
want to
left with
explain
all the
that?
money.
Can you simplify that for someone who might have not understood?
Yeah, they definitely there was definitely scammers back then.
No, not what you just said. The video. I mean,
Oh,
simplify that concept.
So you don't have a car, but you have an idea to go deliver something, deliver apples from your tree. Okay.
Okay.
I don't know.
Good.
And then, but to do that, you need a car. How do you get a car? You have all of your neighbors give you $50. Now, when you say you have 50 neighbors, you split that up among your $1,000 profit and you give them, like you disperse however many out of the shares. That made no sense. I'm so sorry.
I lost you. You're almost there.
I was almost there. So
Yeah.
somebody finish.
No, it made sense. I was kind of laughing a little bit because all I could imagine is us hiring a Fiverr animation guy and animating your little explanation. But yeah, it was pretty much a way to
Maybe I'll draw one and
We gotta finish the
procreate.
concept.
Yeah, but
Yeah.
I mean, pretty much back then it was a way to raise capital, and that's essentially what the stock market is. It's a way for publicly traded companies to fundraise.
Yeah,
and
someone has an intention, like getting their apples somewhere.
Exactly.
And they have to raise money to make it happen.
Because they need, there's some sort of a need there. I mean, it's the same way that anybody still raises capital today for a startup company or what have you.
Well, the whole thing is you need money to make money, and back then they didn't really have as easy access to raise money, so they turned to the public. And then, obviously two people need to benefit from the trade. So the return was, okay, now you get a share of our profits. So same thing with the company. If you invest in a company, and this is more investing on a fundamental basis. I'm sure they weren't looking at patterns and moving averages and volume back then because there wasn't any.
Yep.
But yeah, it's like, you are investing in this company because you believe in it, that it will make more money with your money.
So if you got that car finally, bought the car,
And you can
and you delivered those
apples.
apples, and you made enough on those apples to make it the return worth it for the investors.
The profit would get split between my 50 neighbors.
Whatever you made on the deliverance of apples.
Yeah, same thing. Let's say one
Yeah.
neighbor gave you 10 times as much as all the other neighbors gave you. They'll get more because they had more risk in the...
Yeah, they have more
investment.
equity, more percentage.
Exactly. What do you feel? What are your thoughts on using other people's money to make money to get rich? Like I've heard a lot of rich people say, "Don't use your own money. Never use your own money. Use other people's money to make money."
I believe in it. I've heard of people taking out loans to buy option contracts. Never do that.
Okay.
That is a terrible
Fair.
idea. But if you're opening some type of solid, sound business and you have a plan, I don't see how there's any issue with that. I mean, it was kind of just like what we watched. Is you need money to make money. If you have a great idea and you can turn to investors and get money or take out a business loan, and you need that money in order to start your idea, then yeah, I think that's a great way to do it. And then in terms of your money versus other people's money, we've touched on before how I'm into real estate. It definitely depends a lot on interest rates, because what is the cost of borrowing money? And if your money is better borrowed, it's not expensive to borrow the money, then I believe, which is all dictated by the interest rates, then I believe it makes more sense because, let's say you have $100,000. Better example, let's say you have $500,000 and you want to buy a house in cash, right? You can buy that, let's say you buy a house, $400,000, put $100,000 into it. Now you are out of money essentially, right? And the only money coming in is that cash flow from that property. Now, if you have $500,000 and you want to take each $100,000 and use it as a down payment on a $500,000 house, now you have 5 houses, right? There's more risk because if those houses aren't cash flowing, you're not able to pay off those debts, but you're able to increase your cash flow because you are exposing yourself to more equity and more capital. Mm-hmm. So, obviously borrowing money goes into, it's very complicated and requires, I fully don't understand it. I'm sure most people don't. It takes a lot of, I say to understand it on a rudimentary, however, it all depends on what you're doing, what type of business you're in. Yeah, but let's continue with this. I think they're going to get into the modern stock market by the looks of it.
We're still watching this? Oh, falling asleep over here.
Oh, come on.
Companies have been collecting
Back in
funds from
colonialism.
investors to support all kinds of businesses. And today, the stock market has schools, careers, and even whole television channels dedicated to understanding it. But the modern stock market is significantly more complicated than its original incarnation. So how do companies and investors use the market today? Let's imagine a new coffee company that decides to launch on the market. First, the company will advertise itself to big investors. If they think the
This is
company is a good
IPO, I
idea,
believe.
they get the first crack at investing and then sponsor the company's initial public offering or
Here, pause
IPO.
it.
This launch
Have you ever tried getting in on IPO?
Well, I mean, like when it finally releases on the platform, when it becomes live and tradable.
Yeah.
Yeah. What was it? I think there was one. Oh, God, I don't remember. Maybe one or two. I think I tried to get in on Hood last year. Snow was one,
Yep.
and I don't think I did well.
I remember you did trade snow at one point.
Yeah, there are people whose investment strategies are trading IPOs.
Yeah, when it IPO'd, when it, what's the official? How do you say it? When it became live and tradable on Thinkorswim, I bought it right away.
You buy options, shares.
I don't even think there were options when it.
Yeah,
first
some
came out.
stocks are
It was just
tickers
shares.
are not on the option chain. Okay, that's interesting. Not a strategy you're
No.
looking to come back to.
I mean, if I got the opportunity to invest in a company before it IPO'd, then if the company was good and I believed in
yeah.
it, then there's huge opportunity there.
Huge money in that.
That's another definitely realm of investing I'll probably venture into and experience in the future.
I mean, that's how, these huge CEOs, Elon Musk, Phil Knight, Howard Schultz, how they essentially become billionaires, multi-millionaires
Yep.
through initial public offerings, because it's that capital that comes into the company that's able to inflate its share price. And, they hold so many of these shares because they are the ones who started the company.
Yeah.
That their net worth is, that's how, they are attaining these crazy net worths.
Yeah.
But,
Steve Madden.
Oh yeah. Wolf of Wall Street.
oh, right.
They
We'll
IPO'd
continue.
Steve
Yeah, I didn't
Madden.
get that reference for a
Yeah.
second. I was like, oh my god.
Yeah, Jack does not. We watch Wolf of Wall Street every single
now
night.
that you've mentioned it, I get it.
We watch it every day.
No, we don't.
launches the company onto the official public market, where any company or individual who believes the business could be profitable might buy a stock. Buying stocks makes those investors partial owners in the business. Their investment helps the company to grow, and as it becomes more successful, more buyers may see potential and start buying stocks. As demand for those stocks increases, so does their price, increasing the cost for prospective buyers and raising the value of the company's stocks people already own. For the company, this increased interest helps fund new initiatives and also boosts its overall market value by showing how many people are willing to invest in their idea. However, if for some reason a company starts to seem less profitable, the reverse can also happen. If investors think their stock value is going to decline, they'll sell their stocks with the hopes of making a profit before the company loses more value. As stocks are sold and demand for the stock goes down,
Pause it.
the stock price
Yeah.
falls.
This is pretty basic stuff.
Yeah, it's very,
probably
very
from
basic.
now
I
on.
was more interested in how it started. I think that was an interesting
Yeah,
story.
I think we're good on this one.
Yeah, we can
Yeah.
pause it. If you're interested, we'll put the link in the description of this video to give them credit.
Yep.
What do you think about Meta?
Meta?
Yeah,
Okay.
I thought about it as they just mentioned something.
Well, I'm looking at a key level on Meta. Is that Meta or is that?
No.
No, that's just, here, ready? I can pull up the chart. I actually do have a trade plan. I'm watching this key level. It's been bouncing off of support for a while. And then if it breaks the support, I'm trying to play down to its yearly lows. And
Jeez, it's down 7% today.
yeah, it's a lot. Here we can pull up a daily chart, which means
How
each
much would that
candle's a
make?
day.
If you bought a contract,
Well, it depends.
like if it was a month out.
I mean, I would have to go into the analyze tab and see which contracts I want. And if I bought, let's say I bought $10,000 in contracts that are relatively risky, that sounds like a 100% return ish. I mean, it's
Yeah.
like there's so much more
There's
that
so
goes
many
into it when
variables.
analyzing a trade, and I
Just
haven't.
curious from a noob perspective.
It would definitely be a
If it does,
five-figure plus trade.
Yeah, if it broke below. Questions. Instagram, I asked my Instagram following, if they had any questions that
do
they'd
it.
like to ask, and we'd answer in the podcast. So,
Any that seem interesting.
yeah, there's a couple. Let's see. Here's a good one we can answer that I just saw. There are people that do your mentorship for free. Why is yours different? I think he means there's other people who like have mentorships.
Yeah.
that maybe don't charge. So why is ours different?
So, well, do you want to answer that or you want me to?
I mean, I'll answer. I mean, it's like the value we're delivering obviously is just something that I never put out for free. Like the value, I've spent the last 5+ years learning how to be a profitable trader. I've not only given everyone, am giving everyone that exact system, but I'm actually sharing the stocks I'm buying and I'm sharing when I'm selling those stocks.
Yeah.
No one does that. Maybe they do it, but it's skewed.
I mean, yeah,
it's not honest, and I mean, it's not like the transparency that we have is something that no one else has.
Yeah, or at least very few at that matter. Yeah, I also believe it's running a mentorship group it's not free.
It's very expensive. We have a whole team to run it.
Yeah, just to run this thing. So it's not like you would be losing a lot of money. I mean, from moderators in Discord to the technology that goes into it to grow. Like we're growing. We're not stopping here with I mean, we've touched on other podcasts how we're creating this ultimate mentorship group, interacting with the biggest traders in the whole industry. That growing this project is a lot of work. It requires more than 40 hours a week. So it's money, yes, due to the value of it, and also due to the work and capital it takes just to keep the thing going and actually growing it.
Yeah, it's like, do you think your teachers are gonna, teach you at school? Do you think they're teaching you at school for free?
Yeah.
If schools didn't pay teachers, there would be no teachers.
Yeah.
I've never heard anyone say that, but that's so true.
No, it's true.
No one's gonna teach you anything for free.
Yeah, and the guys that are doing it for free, I have joined free mentorship groups, and they're good. There's a lot of it's more rudimentary. No one's doing call outs, talking about what they're trading, because that to give away your trades for free would only work against you.
Yeah,
I mean,
you have to charge to offset what you're gonna lose, which is eventually like someone's watching your trades. They're it's not like, I guess I can't even say that, so I'm not even gonna get into it. But nothing's for free in life. Realize that. You'll be better off if you do.
Yeah, and I wanted to talk about this one theory, and it's called the efficient market theory. Have you heard about it? Efficient market hypothesis.
I haven't, no.
It's come up in recently. It's come up in a few books I've read, and it's also come up in a lot of podcasts. And the efficient market hypothesis is a hypothesis in financial economics that states the asset prices reflect all available information live, right? So a direct implication is that it is impossible to beat the market consistently on a risk-adjusted basis, since market prices should only react to new information. So the idea out there is that every price that is out there already reflects information that is already available, right? So everything is priced in, essentially. And what that means is that it is essentially impossible to beat the market. And that in the end, over the long run, not everyone, but you're not going to achieve greater gains than the entire market as a whole. Do you believe that?
No, of course not.
No, I don't believe it either. Because, I mean, there's plenty of traders out there that are doing 100%. I mean, how much are you up right now, this year to date?
Well, so we talked about this in the last episode, and there's different ways to construe the way you represent gains.
If you are managing risk properly.
Okay, so yeah, if we're looking at gains in percentage gains called out per trade versus losers, offsetting, gains offsetting losers, I'm up like 280%. If we're talking about risk management at a 5% position size on your portfolio, which is what I'd do if I was managing like a hedge fund or like a huge portfolio. I'd go 5% per size.
Yeah.
Because I'm risking other people's money. I'm trading with other people's money. They're expecting gains that hopefully are gonna beat the market. Most hedge funds this year are down 6%. That was the average. The average hedge fund was down 6% the first half of the year. So if I had done that all year, I'd be up around 12% right now, 13% on that portfolio. But that's not what I do. You have to take into consideration many things. So one of the things is if I trade a setup that I know I have a higher expectancy with, I'm going to size in heavier on that position.
Yeah.
If I trade Calls versus puts, I know I have a higher expectancy. Trading calls, I'm going to size in heavier. Okay, depending on the risk to reward, all right, depending on my strike rate, I'm going to adjust my position sizes. So if I wanted to, push my gains beyond that 13%, those are the steps I'll take to do so.
Yeah, no, that makes sense. I was listening to a podcast with this guy, individual named Lance Bernstein. Sorry if I'm pronouncing your name wrong. But he talked about how he has A, B, and C setups, and this guy's an 8-figure trader. And he talks about how his A setups, he's putting in, and it's exponential. It's not linear. So his C setup, he might not even trade that. His B setup, he might put in $1,000, and obviously he's not putting in $1,000. And then his A setup, he might be putting in $10,000. Okay. So realizing, that's why you need to log your trades and realize what you're trading, because you need to know yourself as a trader. And if you have a higher expectancy to win, why aren't you putting more money on that? Yeah. And if you have a lower expectancy to win, why are you putting more money on that? You should be putting less money. So
yeah, exactly.
Interesting topic to touch on.
I want to read a couple more Instagram.
Yeah, let's get to a few more of those. I've done that one time where last episode where I reached out to my Instagram audience, and then that last episode was electric.
It was.
That was. Yeah, I wanted to talk about that. How last episode was by far our best.
It was really good.
Yeah, if you haven't seen that, go check it out.
It's only downhill from there. No, I'm just kidding.
No, from now on, we are really, committed to being in the office 5 days a week, putting in lots more hours, and we are going to be getting. Our goal from now on is to get a guest every single episode.
Yeah.
So.
Well, we'll have a very
every once in a while we might have it's just you and I, but it's going to be guest driven, and we're going to have some interesting guests on, and not to talk just about stocks. We've been reaching out to a lot of influencers lately, and kind of getting into that industry because that is very interesting and growing. You're growing your self brand.
The finances behind it.
Yeah, like how does that work?
How creators support themselves.
Like how much are you worth as a creator? You know, like how much should a clothing brand have to pay you to say, hey, go buy these sweatpants. I love them. They're really cute. So I would really love to get into that. We've seen a huge. The industry's become huge in the last 5 years. So,
hey, we wanted to plug we'll plug it a couple of times. We'll clip this and put it in the beginning or somewhere in there. The sponsor of this episode, right? They get 3 slots, beginning, middle, and end. 3 slots to the sponsor. This week's episode is sponsored by thedailytraders.com. If you'd like to learn how to trade and invest in the stock market, thedailytraders.com provides the most exclusive mentorship group available online. TheDailyTraders.com does not only show you and teach you exactly how to trade, but they let you copy I'm talking in third person now. If you guys want to see exactly when I buy and sell a stock, click that first link in the description and use discount code podcast99 to get $100 off. Thank you for watching. Hey, where'd you go? We're still in the episode.
Wait, I thought you were just doing the...
No, we'll just throw it in and we'll be lazy. We'll throw it in the middle.
Oh.
Let's end the episode here. I thank you guys for watching. I hope you did enjoy.
Like and subscribe for more.
I need to get food.
It's about to get real.
Your videos are coming too. Next week.
Yeah.
When this goes live, your video will be out.
No. Nope. Monday.
In 4 days.
Monday.
All right. So stay tuned for Jack's videos coming soon.
Peace.
Bye.
Yeah.